Welcome to the Broken Pie Chart Podcast, episode 302. I'm your host, Eric Moore, with my co-host, Jay Pestrichelli. Jay, I know you love coming on when the market has made a new all-time high. That did, in fact, happen again today.
Woohoo! All-time high again, right? Market closed at, I touched 6099.97. Couldn't quite get to 6,100, but I'm willing to say 6,100.
Yeah, law of round numbers, right?
There you go.
Resistance, yeah, natural
there
numbers.
You go. Yeah, so no, it hits, right. I mean, people, yeah, it's not 6,100. Yeah, I mean, look, this is, again, another strong week. Slow trend upward. Not a lot of, I mean, intraday, maybe some movements, but, I'd say a very mellow week, low volatility. We saw the VIX drop notably. Where to close? 12.7 today. So that's dropping. Look, it seems like, we may be in this period for a little bit, who knows, of lower volatility because the market is just ticking higher and higher. Reminds me of the old, people would talk about the wall of worry. I don't feel like we have a wall of worry right now. Although last week you were very worrisome, and I'm going to remember that. I won't forget.
Well, we like to switch back and forth. Let's scare people. Let's make people feel good. And at some point, if you listen to enough episodes, you get both sides of it. It doesn't matter. I mean, we buy, we hedge, we have different strategies, but yeah. But Jay, some people have mentioned, hey, the market's gone up too much. I think we're up over 29% now year to date. Charlie Bolello put out a chart, and he had, since 1928, the average annualized total return is about 9.8%. Okay. But how many times, Jay, has the market been over 29% looking at this chart?
Yeah, like, is it rare? That's the question. Like, I've heard this market, this is too much. It has to stop, right? Mm-hmm. Like, that's the question. It actually happens more often than we think. I know we've quoted in the past that the market is up by 15% or more over half the time. That's an interesting data point. But 29, which is where I think you're right. I think we're up about 29% as of today. It happens over the last 6 years?
Yeah.
It has happened almost a quarter of the time, 23 times. A quarter of the time, the market has been up 29% or more. And even if you shrink the time period into like half, because, you take out those early years, who cares about the market in 1938 or 43 or 53? Let's talk about recently. Even from like the last 50 years, if you look like 75 and on, it's about a quarter of the time. It's slightly more than a quarter of the time. So, I mean, this is it's within the standard deviation. It happens. It's something that shouldn't be considered so rare.
Yeah, I mean, you're right. And one of the surprising things too is you look at the average, and he's drawn the line there, the 9.8%. The market really doesn't. I mean, it's not too often that it actually is average.
No, rarely is it at the average. But look, that's normal with sure. Numbers in general, right? But there's above, below, or I mean, we don't have to talk about how average works. I think everybody understands how averaging works. But if let's look at the last few years. 29 this year, 26 the year before that. We had the minus 20 plus minus 20 in 2022, then a 29 in 2021, a 31 in 2019. So since 2019, this has happened quite frequently. I don't know if I'm not going to say this is something like, oh, there's a new trend, but you can have these bunched years where you have the, growth, the market has some good growth. You throw in a negative in there and it averages itself out, but a lot of years of positive growth. It's why we think you should stay invested. You want to hedge against the fear? Great. But you should stay invested. It's hard to time this market. You find yourself chasing it.
You mean like the 95, 96, 97, 98, 99?
Somebody might want to reference that amazing bull period. Yep. Sure. It might be like that.
All right. Let's see. And this, by the way, was why I was saying the analysts or the investment banks were being lazy by just throwing 12% on top of the market, 10, 12%, because they're basically throwing the simple average total return onto the current, price and calling it a day. But I want to see some people call for 29% next year. That's what I want to see.
You think back to back someone's going to call that?
Sure. I mean,
all right.
Every bit as likely as going down 29%, I guess. I don't know. What do we know?
I would say not as likely, by the way. How many times on this chart has the market been down 29% in a year? 3 has it been down more than 29% over the last 96. So I would say not as likely, Derek.
Yeah, not as likely.
Not as likely.
You know what is likely? Stupid meme coins losing money. I don't know if you've... All right.
Well, tell us how you feel, Derek.
I worry about people. I worry about people buying this junk. So to catch everybody up, this was on Bloomberg, and I think it's listed on Bloomberg. It's not a Bloomberg piece, though, to be clear. It's a Benzinga Newswire that they have as a news feed, and it's the title is Hawk Tuah girl accused of scamming crypto buyers after newly launched meme coin pumps and dumps. Victims contemplate legal action. And I'll just give you a little more insight into this. A meme coin launched by viral influencer Haley Welch of the Hawk Tuah fame became a subject of controversy on Wednesday after a pump and dump, eroding millions of dollars in market value. What happened? Hawk, H-A-W-K. Jay, I didn't find this symbol on Bloomberg, by the way.
No, you couldn't find the Hawk Tuah token on Bloomberg?
No,
okay.
I couldn't. So apparently it launched on Solana. I don't know how that works, but maybe you can tell me.
I can. Go ahead.
Based Meteora on Wednesday, whatever the heck that is, swiftly gained a market valuation of almost $425 million before plummeting to $30 million within 5 hours. And as of this writing, the value is down 90%. And then there's an ex-user with a pseudonym, I won't read the name, revealed that their $35,000 investment in the coin was reduced to $2,000 after 10 minutes of buying. I'm a huge Hawk Tuah fan of Hawk Tuah, but you took my life savings. Oh boy. like what?
Oh boy.
First of all, who would put their life savings into the Hawk coin? And I always say, I have no idea what these people were promised, what the pitch was on this, what, utility or use this coin was going to have. I have no idea what these Meteora things is, or it's Hawk, but it's launched on Solana. I just, come on.
You're showing your years, my friend.
I know.
Showing your years.
I know.
So look, this is a terrible scenario where it was. All right, I'm going to equate it to it.
Who needs this stuff?
Nobody. Pump and dump. It's Boiler Room. You remember Boiler Room?
Oh,
you recommend that? Does that make it on your list?
Yes, that's a good movie.
Boiler Room. So this is the same thing, just a different channel where there is this huge pump up of trying to get, investors to buy a token that is created and just sits around, just kind of sits there. And then once it goes on one of these trading platforms, I'm going to say swapping platforms, because you don't really buy and sell, you swap for Solana. So Solana is actually considered to be a fairly stable token. It's like an Ethereum or Bitcoin or one of those. And these cryptos that come out they need a platform, right, to go live on it. So they need to be denominated. Instead of denominated in dollars, they're denominated in Solana, right? Okay. So now you have the Solana-based token, Hawk, and it comes out, and because of whatever reasons, right, whether she's taking advantage of her, her popularity, and we don't have to go into where that came from, but all of this stuff was like she pumped it up. People bought it because they liked her. She's personable, and then boom, she sells all of her coins, right? She sells all of her holdings, and the rug was taken out. I think that's the term that they're using these days.
Rug pull, right?
Yeah, the rug was pulled out. It was a rug pull. So this is the way that this works. By the way, this is one token out of thousands that this happens to. I'm not joking. I talked to some younger traders that we know, maybe that we might have had on the show before.
Yes.
This is what they do. They're like, they look for a token that's got some, near term acceleration that's only been around for a few hours. I'm talking about. You swap your Solana for it, and then you swap back into Solana. So I was so interested in this, and I'm going to tell you something you didn't know I was going to tell you. I was so interested in what I had observed from our young traders that I'm like, all right, I'm going to do this. So I do this on Saturday morning because I'm sitting around and I can't trade in the market. And I swap some Solana out of my crypto account, which is a Coinbase account, which I think you would agree at least Coinbase is a real company. Would you agree with that?
Seems like it, yeah.
Sure.
They file, they're a public company. They file
publicly traded company,
yeah.
Right? I have to swap. I have to move some of my Solana over to a different platform. I don't use Meteora, but I'm sure it's the same thing. And swapped out for a coin that was around for 3 hours. It had some fun, Christmas name like Riz Christmas or something. And I happened to be having a conversation with somebody. Turned around. I was down 70% in about an hour. I was like, oh, that was fun. And then I did another one and I made 40% in about an hour. So it's just, these are not real assets. There's nothing you'd ever want to hold long. The fact somebody would put their life savings into a token like this seems silly to me.
If that's true, that was a comment on Twitter. I hope that's not the case.
I hope that's not the case too.
Yeah.
So, but this is the way you want to trade tokens. There you go. This is kind of the running trend. This particular incident is not unique, like what happened with the Hawk. It happens every time. You look at any of these tokens that are around for more than a couple days, the chart looks the exact same. Big, flat, spike up, massive sell-off, lower than where it started the day, and never recovers.
Next time you're going to trade these garbage coins, just text me, and I'll talk you into like watching a game show rerun from 20 years ago or something. That's probably better use of your time.
Listen, it's like I got my little fix in the morning. That's all it is.
Yeah.
I needed my trading fix, Derek. Had a few too many coffees that morning.
Yeah. Well, you mentioned coffee. So if anybody wants to look at this, there's a guy, he goes by CoffeeZilla, and you can find him on YouTube. And he actually goes through, he tries to expose scams. He actually, with Sam Bankman-Fried from FTX, he interviewed him. And from memory, I think I'm remembering this correctly, he was one of the people who, through his questions, got Sam to admit that they were commingling the funds. And he was on a Twitter space with the Hawk and I guess other people. And
different
one of the things,
not the Hawk Tuah girl. Sorry.
No. He was on, I think 2 nights ago with the Hawk Tuah.
Oh, he was. He was on with her. Oh, okay.
Yeah. I'll send you some.
Talking about the Sam Bankman-Fried thing.
No. But he was basically alleging that they charged. Not only did they pump and dump the coins, but that they charged exorbitant fees to do this. And the guy,
the transaction fees they put up. Yeah, sure.
Yeah, and so anyway, if people want to go, I'm not going to put a link to it, but if Google CoffeeZilla, you'll find his channel on YouTube. And he's.
I'm looking at Hawk right now. I'm looking at my little app here. It's up 19% today.
Oh, I missed out. I totally should have bought.
It's got a market cap of 32 million. Where did this start out at? You said 425 million.
No. It popped to 425.
Oh, okay.
And I'm not gonna put these charts, just so everybody knows. I'm not putting the Hawk chart in our show notes. Not doing it. But if you look on that thing I sent you, I think maybe it started at 25 or 30 million.
Okay. Well, in this platform, as soon as it was available to be traded, which must have been when it went onto Meteora, it's straight down since then.
Yeah, not surprisingly.
Yeah,
this stuff has no.
Can we trade some while we're talking? I'll swap some.
Keep going. I don't even know what that means. Don't do it. Watch. Go take up backgammon or something. You better use your time.
I do like backgammon.
I don't know how this is to me. So it's pretty clear they don't have to file. You think about when people file for an ETF or they file for a hedge fund or a normal IPO or anything. like it's pretty clear this is not going through all the checks and balances. I don't really know. I'm just saying.
No, they're definitely not. It's just someone just wrote the code for a token. It's somebody who's writing a code. It is
So
there's no financial review of this. There's none of that. These are made up, completely unsubstantiated, imaginary vehicles that you can, hey, you could trade them if you want to.
all right, exit strategy. We need a broken pie chart token.
Broken pie chart token.
I think 50 million initial offering. You and I will split we'll come out of our share. We'll sell our shares.
Okay, sure.
And then we'll really talk it up. It will go up. We'll get all our shares out. Free money, Jay. This is the exit strategy.
It's not the exit strategy.
All right, let's move on, please. Yeah. And let me just, in all seriousness, if I have no idea what they promised or what they claim this was going to do, but just remember, a 3-month treasury bond is yielding, what is it yielding today? Like 4.6, 4.5?
Yeah.
So that's the risk. That's what you can get on a risk. That's the risk-free rate. In finance, the risk-free rate is the anchor for everything. It's how we do our Sharpe ratios. It's how we do a lot of the different risk metrics. So I don't know what they said people are going to make, but anytime you're making more than the risk-free rate, you're taking on risk.
Yeah, let's move on. It's commensurate with the amount of potential upside, amount of potential, money you can make. The risk is commensurate with that. It's there. So look, the folks that are buying the tokens have no interest in a treasury. I know that's not what you're saying. You're just trying to let people understand. If you expect I should be able to at least make 20% on this, you're taking 4 times the risk of something that's paying you 5%.
You can get 4.6 risk-free annualized, or you can do other things. All right, let's move on, Jay. I'm done.
All right.
I'm done with the Hawk.
Okay.
All right, this is crazy. And I went back and forth whether we want to talk, but I think we should talk about it. So if anyone and I don't know anyone who doesn't know this news now, it was crazy. What was it? Was it Tuesday morning? No, Wednesday morning. The United Healthcare was doing an investor day. And I think, we were on a trading call, Jay, and I just brought it up and you were like, what? And for anyone who doesn't know, the CEO of United Healthcare was assassinated on 6th Avenue outside the Hilton Hotel before, I guess, he was walking into the investor conference. I mean, he wasn't, like Elon Musk is really well known. Tim Cook at Apple. I don't think United Healthcare CEO was definitely well known, but this is like a crazy thing, for a public company. And by the way, this is horrible. Like this guy had a family, kids and stuff. Nuts, Jay.
Yeah, I mean, it was funny. It's not funny that this happened. The way you said it on our call is we're talking about stuff, and you're like, "Oh, the CEO of United Healthcare just got killed at his investor day," and I thought you were saying, like, "Wow, somebody asked him a lot of questions."
Oh yeah,
and like,
yeah.
"Oh, he's having a rough day."
No, I'm like, he's murdered. He was murdered.
He was shot. So, yeah, look, this is interesting. They're still looking for the guy the last I saw that did it.
Yeah.
Got some interesting leads on this. But I think I think it's an event. We brought it up. Great. Let's talk about how it impacted the company.
Yeah. I mean, it must have had a good start to the investor day because the stock had opened a little bit. I mean, a gap opened from 605 to a little over 610. Rushes up to probably, 622 and change. It happens, it comes right back, but it basically closes where it opens. And then the next 2 days, we've had these 2 big down follow-through days. So it's probably down about 12.5% from the high on Wednesday. And it's been a delayed reaction. I don't know that there's been a lot of news from the company. But this is kind of single stock risk, right?
Yeah, I mean you're right. So I think the lack of real news and defined, what's your plan? That United hasn't reacted, and whether, who knows what the public reaction is going to be to this. It seems like it's, the assassination was due to potentially, who knows? It seems like it's due to policy based off of notes, words written on the bullet casings and stuff like that. So, maybe it's there's going to have to be some, I'm making air quote changes, but I also think the lack of communication about this has been damaging. And all of those things roll up into this is the risk you take when you own single stock. I've always used the example of you never know what can happen in a single stock. Indexes are less volatile because you don't, it's harder to get a 10%, 12% down move in indexes than an individual ticker. I had always used the example of, I think, Intel's CEO had an affair with his assistant or another employee. Maybe it wasn't his assistant, but another employee that he didn't disclose, and he got fired, and the stock dropped 10% in a single day. Or he had to resign. And one of those things, it's just one of those unexpected things, unexpected movements can happen in individual stocks. I mean, United Healthcare is one of the largest. It's in the Dow. It's a huge company, right? I don't know if it's in the top.
It's 1% of the S&P, I think.
Yeah. This is like, and anything can happen to any individual company. And so it's for those of you that have single stock exposure, you never know when something like this could happen. And it's too soon to start, making jokes about this thing, but you never know when the CEO is going to not be the CEO anymore, one reason or another. And it's single stock risk is a real idiosyncratic single stock risk is a real thing. Is a perfect example. Probably nothing has changed with the fundamentals at United Health, right? So, but it's down, and and they're ugly down bars, by the way. It's not like gradual.
Yeah, like open and then go straight down. Goes. Yeah. Don't you? I mean, I don't. I mean, this is a rough one for any company. I do agree. I mean, whoever is the acting CEO, I don't even know if they've named an acting CEO or the board. Like, they probably need to communicate or come on CNBC or issue. Maybe they're. I don't know. No idea. I mean, that's got to be.
No, but I think the reason you brought it up, yes, it's newsworthy. It's obviously newsworthy,
but it's single stock, yeah.
But it's about single stock risk.
And this is one too. The implied volatility. So it's also like, let's say somebody had this and they said, "Oh, I want to hedge it." Well, hedging it now is now more expensive. Not only that, but you're hedging it at a much lower price. So to give you an example, and to listeners an example, the implied volatility prior to the investor day, so that would have been Tuesday, it was 22, which basically on an annualized basis is implying a one standard deviation move of about 22%. That's what the options market is. And now it's jumped 9 points to 31. So now the expectation is more volatility. So it's kind of, the right time. If somebody was concerned or somebody had the stock, the right time to do this was not after the news came out when hedging was cheaper and the stock was higher. So, for example, if you put a 10% lower hedge on today, it would be more expensive and you'd be buying the 500 strike. Where the other day, let's say, when it was 620 or thereabouts, you would have been buying a much higher strike and it would have been cheaper. And there's different ways to do it, as people know, spreads or just, you could buy a put. Would have been a little expensive because they do pay a dividend, but yeah. So single stock risk.
Yeah, it's interesting because we do a lot of this single stock hedging and income and call selling for income on single stocks. And you just don't know. Usually we tell people you're going to be disappointed in your hedge 4 out of 5 years, right? It's just because you put on these, I'm going to call them catastrophe, but really major sell-off hedges. They're usually fairly affordable. By the way, it's not like when I say affordable, the market doesn't charge you too much for something that isn't going to happen all that often. But all of a sudden, if you were concentrated in United and then this type of thing happens, having the hedge on would be helpful, right? It would protect, it would offset some of the downside movement of the stock and even give you the right to sell at a certain price. So for example, if you had, like you said, you hedged this at 600 before the investor day, 10% down 540. If you had hedged 540 at that point, if your puts are at 540, means you can always sell at 540. Even if it's trading at $300, you could sell your stock for $540. That has value, right? So it's just one of those things that you gotta, if you're gonna be concentrated and you're willing and you want to hold the stock, like you said, United has a good dividend. You like the dividend, or it has a dividend. I didn't necessarily mean a good dividend, but it has a dividend of like 1.5%. You like the growth of the stock. Great. Maybe for tax reasons, you can't sell it and you happen to be concentrated. Having that hedge is one of those things that reduces the risk of idiosyncratic stock movements. I like to use that word. Mm-hmm. I almost feel like that word was designed exactly for this kind of a scenario, right?
Yeah, it's crazy.
A specific problem associated with this specific stock. And so, yeah, we do a lot of this for individuals that find themselves in concentrated positions and they don't want to take this kind of a risk. A lot of times people worked at a company. I could go off on this one for a long. We could probably do a whole show on concentrated. We probably do a whole month on concentrated.
I know.
But yep, this is, and all those years that anybody that we would have been hedging United Healthcare for, they go, hey, it's been fine. It's been going up. I'm okay. Why am I doing this? Why am I doing this? Today, this week is a reminder of why you do it.
I think next week will be interesting because more news will probably be out, but also from a technical basis, looking at the stock, if you look at that 1014, so that October 14th low, old support. I mean, we're kind of hitting the old levels of the 1014 low. There's a lot of gaps that got open, got filled. It's
200 averages coming up close as well. Yeah, a lot of this. It'll be a pivot point next week at this. That'll be interesting to see if it's just treated as a one-off and the company's got a plan for this and it could alleviate investor fears. Who knows? Who knows what the fear is? But there's some fear in the stock.
I also wonder if some of especially the healthcare companies, are going to have more. It's not capex cost, but security cost.
you think?
Yeah, I mean, the guy was walking. As far as been reported, he was staying in a hotel. It's been reported across the street from the conference. So where. I mean, you and I are both from the area originally, and that's on 6th Avenue. It's a couple blocks south of Central Park, but as far as it looks, he was walking by himself, just into the conference. So, yeah, I'm actually surprised. Like, I don't watch CNBC that much, but I'm almost surprised it wasn't 24/7 coverage on CNBC. Like, to me, this is like it should be a bigger deal than, and I think other maybe it's the CNNs, the Foxes, they're covering it, but I don't know. All right, let's move on to get off.
Somehow you're still depressing me today. Let's keep going.
No, the jobs report came out, and we saw unemployment 4.3%, which is, I think, higher than it was last month, but it's really interesting. And by the way, that's rounded. So the way you get that number is you take the number of unemployed persons, and this is in thousands, but 7,145, and you take that into the civilian labor force size, which is 168,286, and you get 4.2457. So rounded, it goes to 4.3. So, but it's not quite 4.3. It's like 4.2 and a half is really what it is.
Yeah.
It rounds. And when you look at this, what happened was the civilian population was lower. So the size of the labor force is lower. The unemployed persons was higher. And it's just numbers. So when you get this, you sort of have these, you do the division and you come up with the unemployment. But what I thought, Jay, was interesting about this report is Bloomberg, this is Michael McDonough, he puts out some great charts he builds on the Bloomberg terminal. And this is contribution to U.S. unemployment rate. So the unemployment rate rounded 4.3%. But then you take of the 4.3, who is responsible for that? Well, job losers was responsible for 2.02% of the 4.3. New/re-entrants to the labor force responsible 1.71 or 72%, and then job leavers 0.5%. So I guess the job leavers were like, yeah, I'm leaving. I don't have anything else, but I'm out of here. So that's 0.5% of the
That
4.3.
happens. Didn't they write a song about that?
Take this job and shove it, I think. Was that a country song?
In the 80s. So I just have a clarifying question here. So you talk about job losers, that's pretty obvious. People that lost their job. You've got job leavers, that's pretty obvious. So this new entrance to the labor force, how is that contributing to the unemployment rate? Maybe you can.
Let's break down new and reentrant. So new would be, let's say somebody is now aging into the labor force age. So they age into it. Their birthday, and now they're part of the working age population. They're looking for work. They could be people coming to the country. So people coming to the country say, okay, I'm here. I'm looking for work. I don't have a job yet. So that's certainly two of the the common ones. Reentrance is a little bit interesting, and I always kind of sarcastically say, there's probably a guy who gets the call for the survey last week, and they say, "You looking for work? Are you working? Nah. Are you looking for work in the last 4 weeks? No, I'm good. I'm good." They call him the next week, and it's like, "Yeah, you have a job? No. You looking for work? Yeah, I actually kind of would like to have a job." So that person is now considered unemployed and part of the labor force, where prior, when they haven't been looking in the last 4 weeks, they are not part of the labor force and they are not unemployed.
So he ends up in that example, that person ends up being part of the unemployed, and him coming to the labor force, the reentrance pushes the unemployment rate up. Okay. Got it.
That's right.
Thank you.
That's right.
So that's like almost half of the number.
That's right. That's right. And that's why, if job losers was really, really, a much bigger percentage of this, I think that would be more cause of concern. And this is a chart I will put in. You'll see it's in blue is the job losers, orange is the reentrants new. And
it's kind of on the rise though, Derek, no?
Well, it is on the rise, but I don't think it is spiking necessarily.
No. I can't imagine what this would look like in, 08 or even 2020.
Sure.
I guess I could have been 2020. That happened before 08.
So I don't think it was that bad of a report. And in fact, it caused the probabilities for, the Fed cut next week? 2 weeks to go up. Yeah. So it was like a positive negative, but then when you look below the surface, I don't think it was too bad.
No, it was fine. A lot of stuff felt as expected. I did like the revision to last month, though.
Yeah, right? Talk about that, Jay. That's the establishment. That's the business survey. They call the businesses, right?
Yeah. So in this case, last month, I think the non-farm payroll job was only a plus 12,000. That got revised up to plus 36,000. So that's nice. I had heard that there were a lot of late responders to the survey and those types of things. And so that's nice to see. There was some. I was actually hoping for a much bigger move, like over 60 there. I was hoping for that to be like, okay, October was, a little bit with the hurricanes. And I think there was a strike with Boeing, right? Those things contributed. But it's nice. It went high. It's good. It went up. So the numbers, the revised numbers here, September is at 255 job gains. October only 36, and November for this month 227,000 the non-farm payroll. So this is we're staying above trend. We're staying above average. I think that's good.
And these are seasonally adjusted, so lest somebody think, they're just the department stores hiring the kids to wrap packages. There is a seasonality adjustment they make to it. There is, I won't bore the audience, but they did change some of the benchmark things they use and some of the mechanics of how they do it. That does affect the numbers, but I don't want to get into that, Jay. It's good. I'll bore thank you. The only thing I would say, if I'm looking in here, it seems like, is it leisure? Where's leisure? Leisure where is that? So construction had positive jobs.
Close to the bottom, just above government, too above.
Yeah, so that was 53,000. That was pretty good. Additions.
Yeah.
And private education and health services. Healthcare is always killing it, by the way, it seems like. They, and then private.
You need to use those words exactly.
Yeah, poor choice. Apologize for that. So Who lost the year? This
Retail trade. Retail.
Okay. Yeah, retail trade. Yep.
Yeah. Lost 28,000 jobs. Yeah.
So I don't know. I mean, I think this is actually good news.
It's a fairly positive report. The market liked it also.
And it's good news because if we had another, 12,000 print like we did on the initial in October, you would say, oh, wait a second. The Fed is really gonna, need to cut rates, and you're gonna, the economy is going a heck in the handbasket. But this is like, I think it's okay.
All right. We got something that's okay. All right, good.
Here's what else is okay. Bloomberg has a function where they use AI. This is kind of cool. I haven't worked with this tool too much, but Mike McDonough also put this out from Bloomberg. They do an AI powered topics. Looks like they scrape using AI transcripts from S&P 500 earnings reports, and they look for mentions of job cuts. And it looks like there was only 32 mentions of job cuts compared to, if you look back in 2020 at the high, it was like 150 mentions. So 32 of the 500 companies apparently using this AI tool that Bloomberg uses mention job cuts. So that, and if you look at the chart I'll put this in when we post it on our Zega Investments website, I mean, it's higher than last month and the month before, but it's not as high as it was early in the year.
Yeah, interesting to see that less companies are talking about job cuts. So look, this is all good for stability.
Who is, healthcare. 7 of those companies are talking about job cuts. And industrials. Okay.
Industrials. That seems interesting only because you'd think with the upcoming administration, there's a little more focus on industrials, but
no energy companies talking about it.
No energies or utilities talking about it at all. Yeah.
All right. Also, U.S. job cut announcements by industry. Automotive. This spiked to the highest level since the last time it spiked. When was that? Probably between first and second quarter.
Yeah, it looks like May.
Somewhere around there. I don't know. I'm hearing rumblings that they've kept
second highest spike since 2020. So I know we joke. May was high, and this is the second highest spike in the industrial, automotive. Yeah.
I mean, I'm hearing rumblings that they're still asking a lot for the new cars, and you have interest rates that are higher. And I think we've seen, didn't Chrysler change their CEO? He stepped down, I think. I wonder if maybe people know what's going on in the automotive industry. Email me, derek.moore@zegainvestments.com. That's derek.moore @Z as in zebra, E as in Eddie, G as in George, A as in Apple. Investments is up to you to spell correctly. But I'd be interested to hear from some insiders. But I do talk to people, Jay, you know that. And people have said they're not getting the traffic that they once did. It's an N of 1. But yeah. I don't know. You hear anything on the automotive side?
No, I haven't heard anything on the automotive side, but I wonder if it's more cyclical because after we had that period of time, you remember when, used cars were more than new cars because you couldn't get a new car and used cars were. I think once we've, moved through that, circulated through that cycle, because now that is fine. I think that, post-inflation and, cycling back, I'm not surprised that this is the case. I would expect this trend to continue in this cycle.
Okay. I haven't tried to buy a car either.
Yeah. Well,
I haven't.
I'm looking.
My 2008 Jeep Wrangler. I did buy a new top for it, though.
Oh, you have a hard top or soft top? Soft top, right?
A soft top, but it's pretty worn. It's like when my wife drives it, she's like, "How do you even see out of this thing?" So she's been.
Have I told you the Jeep story? Our Jeep story, because I have a 2010 Wrangler.
Well, smart.
My son has one.
Yeah. What do you got?
All right, so just real quick. So he's in North Carolina right now, and when Helene came through,
the hurricane
Helene came through, really bad damage to everything. Like his house lost power, lost water, right where he's living, and but an 80-year-old tree fell on his Jeep. Right, he was like, "Oh my gosh!" So, but we happened to be going up there for Parents' Weekend, right? And it was. I won't go into all that drama, but when we finally got there, we looked. We got to get the tree off the Jeep. The tree had fallen right onto like the corner of the windshield. Like, so imagine the windshield, and then imagine a tree with a 2-foot diameter, 80-year-old tree falls on the Jeep. It dented the windshield frame, but didn't even crack the windshield. Like, I was very, very impressed with the strength of the Jeep when a tree fell on it. It was fine. He has a soft top too. We have to get the soft top changed out, but that was it. Replaced the windshield frame and soft top. Tree fell on the car. So I'm very pleased. We'll never get rid of that car at this point. I mean, I think it's like this thing is built to last. So just my 2 cents on Jeep.
Yeah, and people have told me the new ones aren't as good, like the quality. That's part, like Stellantis bought Jeep, and people say but I don't know. I still have an old one. It has a lifetime warranty on the transmission. I'll let you know if I ever have to collect on that.
But I had to change my transmission last
year.
Did you? Yep. So what is that? 13 years. Change the transmission.
Okay. All right. Well, the interesting thing is I'm very good with market stuff and numbers and all that. I am not good mechanically, so I'll let you know how long it takes me to figure out how to actually install this thing. I thought there was a professional installation option. Apparently there's not, but I ordered it. So,
well, you could do it.
Yeah. All right.
Yeah.
Let's move on to what else we got here in our list. Oh, okay. Average hourly earnings up 4.03% year over year. This is a chart also from Charlie Bolello. Thank you for posting that. Inflation is, what is that? I don't know which inflation that is, 3.1%.
That's what it looks like.
Yep. So, I mean, this is good. You have a positive spread from inflation, average hourly earnings. And these are hourly earnings, so it doesn't include everybody. But wages have been going up. Is this a problem though, or is this
this is the thing? This is what we talked about years ago when we talked about inflation not getting a foothold into wages.
Yes,
and because it's really hard to undo that, right? You can't, get. People don't leave jobs for less normally, right? So and they move for higher wages. And so, this was a real concern. Now it looks like that has come down from the peak, where it kind of peaked out, right? Where do you think when was it that this thing topped out? Forget about the early 2020 part, but where is it that this topped out?
I mean, I'm going to guess sometime in 22, maybe.
Yeah, 22.
Right? Yeah.
So it is coming down from, being, let's say, about 6% down to now 4%. That's not bad. And so, wages are outpacing inflation. I think that's what you're talking about, but not that much. 4 versus 3, 10, right? It's close. It's just one of those things. You want healthy wage growth. You want wage growth, right? But it can't be so much that it ends up impacting corporate profitability.
I'm not worried about it though. I think this is fine. And for a lot of years, I mean, from 2008 through probably 2018-ish, it was below the inflation rate. Although, you know what?
Oh, but this is just an average. The inflation rate was lower back then.
Yeah, you know what? Maybe
Come on, Charlie Bolello, do better.
It's do better on your free stuff you post on Twitter.
Do better on the free stuff you give us for podcast content, please.
Yeah, I mean, I know he's with an advisor, so I mean, they're kind of doing what we're doing, putting out content and different stuff. But that's funny. I'm not too worried about it. You know what? As an aside, somebody said, we're running these budget deficits, and we've always run budget deficits. Like, why didn't we ever have it? Everyone's saying it's going to cause inflation. I said, not really. And it just shows you how inefficient the government spending is, that when we gave money directly to people, they spent it and that caused inflation. But when you have, these deficits, I don't know how much money is wasted in government spending, but it's just, I know there's more reasons than that. We had the
well, maybe you can ask Elon Musk and the Doge.
Vivek Ramaswamy. Yeah. They were on Capitol Hill today, weren't they?
This week. I don't know if it's today, but this week they were. Yeah.
Doge stands for Department of Government Efficiency, by the way.
Yeah. Basically cost-cutting effort.
Well, or getting rid of waste, fraud, abuse. I mean, I think it's an interesting idea. I mean, you should see some of the stuff our tax dollars go for. Like funding $80 billion for wetland mouse research in San Francisco. That was a real thing. I'm making up the number, by the way. But
yeah, I don't think it was 80 billion.
Yeah. I want to see those results. I want to know
there is a squirrel study going on that I think was in the billions.
Was it really?
I heard. Yeah, that's one of the. I think it's one of the one-offs that they brought out. But like, they're finding stuff that is single-digit billions, which is a lot of money, but nothing. We are spending what, 40 trillion, 30 trillion. They're small pieces.
Well, all right. Let's move on to Bitcoin and MicroStrategy.
Bitcoin again? All right.
Yeah, I had to. I'm not familiar with the symbol on Bloomberg, but I did find it. I had to look it up.
Okay.
Apparently, people trade this stuff. It hit 100,000 this week.
That's worth mentioning. Right? New high. Hit it Thursday.
Is it?
Sorry.
Wait. Is it really
Wednesday?
Is this a correct? Is it 127,000 today?
No, that is not correct. So I don't know. You must be looking at a future or something like that. You want to know what the Bitcoin price is?
Yeah, tell me.
I mean, by the way, it did have a nice pop at the end of the day. I will admit that. We watched it and we did see a lot of stuff move. It's just over 100,000, 100,600 right now, as we're recording this Friday at 5 o'clock in the afternoon.
Okay. I know you'll be trading your meme coins tomorrow morning, maybe a little bit.
Apparently. How's my Solana doing? That's what I want to know.
Well, the reason I brought this up, Jay, is because we've talked about how, you remember, people were buying MicroStrategies and saying it's going to go up more than Bitcoin. And we told people there's a ratio. And like, you buy MicroStrategies if you think it's going to go up more than Bitcoin. And you buy Bitcoin if you think it's going to go down less than MicroStrategy, or it's going to go up more than MicroStrategy. That spread can open and close, that variance. And that's what we saw. So it looks like from November 20th, which was the all-time high for MicroStrategies, or at least, the highest on my chart. It's down minus 17.4%. I think Bitcoin is still up. What was it, up 7.5%? So, roughly a negative 2.5, 2.7 to 1 ratio there. That's different, Jay, as you know, from the beginning of November 4th. I just picked arbitrarily a kind of a low in the chart when MicroStrategies was up 112% versus like 40% for Bitcoin. So there's a 3-for-1, and then it flipped. The ratio flipped. So
in MicroStrategy, you're kind of getting this 2.5 or 3-for-1. It's like 2.5, right? Ratio. But not necessarily in the same direction, like you just pointed out, right? So I think there's probably something to be said that we talked a little bit about. Some technical trading might have, pushed MicroStrategy from a, option supply demand perspective up artificially. But I'm going to tell you something, Derek. If you look at like the 9-day moving average, it hugs that really well straight as it's moving up. I don't want to say straight up, but as a strong up and to the right trend. So I think it maybe just got ahead of itself a little bit here, and which is also why price discovery matters, right? If you're going to do things like day trade MicroStrategy, which right now it is by far, I think the lightning rod for this topic. Like everybody's talking about MicroStrategy. I think it's be careful about this. This is a really volatile stock. By the way, there's a 2x MicroStrategy ETF out there. There you go, up and down. There's an inverse and there's an upward leverage MicroStrategy. So if MicroStrategy just isn't volatile enough for you, then you could trade those doubles, and if not, then you could try to trade the Hawk token.
Don't trade the Hawk.
Don't trade the Hawk token.
Speaking of hawks and doves, though, Jay, one of the things I wanted to get to is as we get on to 2025, there's going to be some changes in the FOMC, the Federal Reserve Open Market Committee. And these are the voting members. So there's voting members, there's non-voting members. And some of them are always on, like the chair is on, the vice chair. But the regional banks, they have rotation. So next year, Boston, Chicago, St. Louis, and Kansas City are all coming on. 2 doves, 1 hawkish person, and 1 hawk. Leaving are 3 centrist and 1 dove. So you can make the argument they'll be a little more hawkish. Now, I will tell you that sometimes non-voting members are the one that, straw man things. They'll be a little contrarian because they're not voting. They can participate. I think they can participate in the meeting, but they don't vote. So it's something to watch on the periphery that, maybe it's going to get a little more hawkish, but maybe it's going to balance because we'll have an extra dove, no centrist, and except for, Powell, Jefferson, and Barr. But
so these other voting members, right?
Yeah.
Isn't it? I mean, does it really matter if they vote? Like the rate change isn't like a majority, right? Doesn't just the chairman decide?
No, they vote on it. But
yeah, they vote, and then what happens from the vote?
Here's the reality of it. I mean, we never used to see the minutes. Now they do minutes. But in general, the chair gets what he or she wants and, gets the members to sort of acquiesce. But in theory, Powell might want to cut and everybody else votes against it. And it's a committee.
Can't cut?
Yeah.
They got to publish the vote. It's like
it's published. Yeah, I think it's published.
I know, but it doesn't matter. I guess if they're all voting the same way, we don't really know. But if what if there were 2 dissent? Like, do they vote for a rate, or do they vote for?
It's both.
A cut or no cut, or they vote for
it's
cut.
It's all the above. So it's the cut amount or raise amount, and then it's yes or no, and then by how much they vote on that, and they talk about it. So, and they publish the dots.
If there was a majority that said don't raise, and Powell says or don't cut, and Powell says but I want to cut, and he has a minority that's in support. They can't do it.
I believe that's correct. But normally, going into the meeting, all these things are, I believe there's back room, maybe backroom strong arm tactics. I mean, normally this is sort of decided, I think, going in. So before they vote, they meet for 2 days. I'm just saying it's, you have people that are always on, and then you'll have these rotating, other people. All right.
I never thought it really mattered anyway, but maybe, like you said, it's all planned out ahead. But then why bother meeting for 2 days? Maybe the Doge group can take a look at the inefficiencies of the Fed if they matter or don't matter.
Didn't Vivek Ramaswamy? Maybe I'm thinking of Rand Paul. He wanted to eliminate the Fed.
Yeah, he did.
Maybe did Vivek want that too?
No, I don't. He might have, but I don't remember. But it was definitely Rand Paul did.
Yeah, audit the Fed too. He wanted them audited. So, all right, the TLDR in this, the too long didn't read it, is the membership change. The voting members are not going to be the same as they were this year, and you may have, 2 hawks on there joining. Not going to be confused with the hawk coin. Don't buy the hawk coin. Okay. All right. Last thing I had on my list
for a reason, but we got a few references into it. That was nice little showmanship.
This will really help the discovery of the podcast. I'm totally putting that in the title.
Oh yeah. We're gonna show up on searches for this.
Which we put in the Hawk Tuah fake token.
I have no idea.
Yeah, We should put something in there. Really scrape the what do they call that? The SEO.
Search engine optimization. Yes,
Yeah.
SEO.
Oh yeah. People will come for like 2 minutes on, and then they'll be like, "What are these guys? These guys
What
are
are these?
clowns."
Who are these guys? This guy doesn't even know what swapping for Solana is. I'm out of here.
I don't even know what Solana is. I've heard the name. I don't know what this Meteor people are. Whatever.
That's just a platform. It's like the brokerage.
Okay. Last thing, Jay. Let me move on to the last thing. So,
Okay.
US Aggregate Bond Index, which an ETF, AGG, which is the Aggregate Bond Index. I think it's now the Bloomberg US Aggregate Bond Index. I believe it used to be Barclays. Now it's Bloomberg. So AGG, as you know, is down from its all-time high. You know what? I don't want to say it's an all-time high, but it's September or July 30th, 2020 high, was sort of the high point. Even today, it's still down on a total return basis after dividends, minus 6.71%. The price change, minus 6.89. So the price is down almost 17%. Then you put in the dividends, it's only down 6.71%. So basically, that's annualized return of minus 1.58%. I bring this up because it's like 53 months we've been in a drawdown for, AGG, meaning if you bought AGG on July 30th of 2020, you are not at break even yet.
Yeah, I mean, when I look at the chart, even if you bought any time before second quarter of 2022, you're still not at break even, including the dividends you got.
Yeah.
And like bonds negative. Like I know everyone feels like bonds are having a good year, but you still they've recovered 5% of the the drawdown. Was they were minus 10, now they're minus 5. Maybe actually they're minus 7. I take it back. It hasn't been an illustrious recovery. It's just so the question is, Derek, is what do we have, a 20-year bond bull market over? And we've talked about that. Listen, once you go to zero on rates, it's hard to get much lower unless you live in Europe, I guess, back then, if you remember. We could talk about that.
No, we went negative in 2020, but on the very, very short end. We had negative yield to maturities.
Yeah. Well, that AGG is not made up of
no.
Whatever repo rate stuff, if that's what you're talking about. But I would say it's just one of those things that I mean, maybe it's rising rates are bad for bond prices, and that's what this is based off of, right? The value of your bonds is negative if you had bought them, in this kind of a fund in this aggregate, 50 months ago. It's just interesting to see. Look, there are times to use bonds. I mean, it's still, you have a still wackadoo curve, right? Like we're still in this period where you're going to get paid less for taking more risk in a government bond. You're going to get paid less for taking corporate risk than a short-term government bond. Things are still upside down and backwards. So I don't know when this is going to come to an end and normalize, but it hasn't happened yet.
The trailing 12-month yield, this according to iShares, which it's one of their ETFs, 3.63. The 30-day SEC yield listed on here is 4.45. Let me see what their dividend is, because I think their yield is higher than that now, or it's definitely higher than the 12-month trailing. But I mean, to get back to break even, let's assume that you're still down 6.71%. So to get back to break even, if you didn't have any movement in bonds, over the next year, you're probably going to get, a little over 4% in dividends or in yield. And so you're talking like a year and a quarter, year and a half, maybe probably almost 2 years to get, if nothing else changed.
Yeah, no, you're 2 years.
AGG really has a NAV erosion problem, don't they? Look at that price, 16.9%.
I'm not even going into what that is.
Minus 6 point. Okay. Too soon?
Too soon.
All right, Jay. Any recommendations?
I do have a recommendation.
Nice.
I started watching on Max, formerly HBO Max. I started watching The Penguin.
Okay.
And I'm going to tell you, it is not what I thought it was. Yes, it takes place in Gotham, but it is not like a Batman story, right?
Oh,
It's amazing. It's not at all. It's really like a gangster story, and different mob families, and then gangsters and manipulations. It's really good, and Colin Farrell plays the Penguin. You would never know it looking at him. The makeup is incredible. So this one's like, I'm at an 8.5 out of 10 on this one.
oh,
Yep.
strong buy. That's
Yes.
that's above a market perform.
Oh yeah, I'm double bull on this one.
Overweight. You're overweight.
For Penguin.
Yeah, overweight. Is that a Goldman? Right, Goldman has those different ones, right? I just Googled it. No, that's not Colin Farrell.
That's him.
No way.
It's him. And he's so good. He's so good in it. It's really, and then the woman that plays Sophia is also so good. Like, it's good. Have I said it's good? It's good.
All right. Strong buy. Buying with both hands. You're buying, you're pounding the table on, I mean, it's telling me on this thing, the cast is Colin Farrell, but I'm looking at this guy.
High conviction.
High conviction list. Oh, there you go. That's good. Interesting. Colin Farrell was in that show that we liked on Apple TV Plus, wasn't he? He was like the investigator, right?
Yep, he was. That's him. That's the guy. You got the right actor. He's so much better in this.
Okay. All right. I'll put that on my list. I watched a movie, The Boys in the Boat. Have you seen this one?
No, but I've heard.
I thought it was good.
Okay.
I thought it was entertaining. And, you've heard the storyline and everything. This has been done before, but it's based upon Washington, University of Washington, and they had a crew team, and they sort of wound up going to the Olympics. Not giving anything away. It's
1936
been in all the
movie.
Yeah.
I'm guessing they didn't get disqualified in the Olympics. Otherwise, it might be a weird movie.
Yeah, no, that would be weird. So it was entertaining. And I don't remember which streaming service. I think it might be on, it might be on HBO, actually. I don't know. Or Max, whatever the heck they call that. Why did they just call it HBO? Why did they have to change it to Max?
They changed it. That somebody at Warner Brothers thought we should change HBO up.
It's like, hey.
It's a real decision to change your brand up like that.
Hey, Jim, I got a great idea. HBO, what everybody knows, let's change it to Max. Yeah, that's great. That's great. I don't know. All right, so there you go. Boys in the Boat and the Penguin. Boys in the Boat. Now let me just make sure I'm telling people where to watch this. Boys in the Boat. Hang on. Oh, is it on Prime Video?
It's a movie, right? So I'm sure you can get everything on Prime.
Yeah, well, maybe if you have a subscription.
Yeah.
Oh, you know what? It was on MGM Plus. I don't know. Do you have MGM Plus?
It's like the one I don't have. Now I feel like I thought I had all of them.
Well, it's not. No, it's like a cable channel. I mean, they have a streaming service too.
Oh, I don't know.
I think it used to be somebody else, and they have some pretty good stuff on there.
Okay.
All right.
Sounds great. I'm a Paramount Plus guy, though. I like
Tom,
that.
all right. So, by the way, we hit 6,100. Remember Tom Lee? I think I heard him say 6,300 is possible.
Okay.
After this week, do we touch 6,300 by the end of the year?
I still say no. Nope.
I'm sort of with
another 200 points.
I'm sort of with you.
I'm
sort of with you.
Yeah, all disclosure, yada, yada, yada. It's only 3%. You know what? It's only 3%.
You know what? I'm doing it.
Can we go 3%?
Let's do it.
It's possible.
Yeah, we're hitting 6,300.
It's possible. Darn it. Okay, there we go.
Not a recommendation. We buy, we hedge. Who
All
knows?
right.
I'll let you know when it gets there. All right, Jay, that's it.
All right, Darren.
I'm going to go trade some Hawk coins or whatever.
Watch the Penguin. You'll enjoy your life better.
I still can't believe that's him. All right. See you, everyone. Take care. Bye.
Bye.